Welcome back. So the market this year, well, it's telling a pretty dramatic story. We're seeing these incredible highs and some really staggering lows. And the craziest part is, it's all happening at the exact same time. Let's get into it.
And really, it all kicks off with this number right here, 3x. I mean, that is the huge performance gap between this year's top-performing asset and the one that's, well, struggling the most. We haven't seen a spread this wide since back in 2021.
And just look at this. On one hand, you've got an asset that has more than doubled in value, and on the other, an asset that's lost nearly a third of its worth. So yeah, this is way more than just a small difference. It's like we're living in two completely separate markets.
So you have to ask, right? What in the world is driving this massive split? And what does it tell us about where things are at right now? Okay, let's dive in and really unpack what's going on under the hood.
This is basically our roadmap for today. This chart lays out the whole picture, the returns, the risk involved, and the general outlook for all the major asset classes this year. We're going to go through it piece by piece from the top all the way to the bottom.
So let's start at the very top with the absolute undisputed champions of the year. I mean, these are the assets that have been all over the headlines and have delivered some just unbelievable returns.
First up, you've got AI and GPU stocks. And listen, they haven't just done well, they have absolutely skyrocketed, posting a massive 127% return just this year. Wow.
So what's the engine behind this incredible run? Well, it's pretty simple. The global explosion in artificial intelligence. Companies everywhere are just pouring billions of dollars into building out their AI infrastructure, and that has created this massive, almost bottomless demand for the powerful computer chips, the GPUs that make it all run.
Now, right on the heels of AI is another tech-driven winner, and it's one you'll definitely recognize, Bitcoin. It's sitting comfortably in that number 2 spot on our list.
Now, it's not quite the triple-digit madness we saw with the AI stocks, but a really powerful 78% surge this year has absolutely cemented its place as a major player.
And you can see here, there are really 2 key things pushing this. A huge part of the rally comes from new investment options, like the spot Bitcoin ETFs. You can think of them kind of like a mutual fund for crypto, which just opened the floodgates for a ton of new money. And that was all amplified by this big technical event in the crypto world called the halving, which basically slows down the creation of new Bitcoin, and historically, that's been tied to prices going up.
Okay, let's totally shift gears now. We're going to move away from those high-flying tech assets and talk about the more traditional, old-school investments. And let me tell you, the story here is, well, it's a lot different.
Yeah, this is a real mixed bag. You've got gold as the clear winner, with a really solid positive return. But then you look at real estate, oil, and even super safe U.S. government bonds, and they're all in the red.
Gold's 24% gain, it really just highlights its classic role, right? When there's tension around the world and people are still kind of worried about inflation, investors often run to gold for safety. And this year is a textbook example of that happening.
And this really shows you the other side of that safety coin. I mean, U.S. Treasuries are supposed to be one of the safest investments on the entire planet. But that negative 15% return just goes to show you how tricky this environment really is. When the Federal Reserve keeps interest rates high to fight off inflation, it actually pushes down the value of older bonds that were issued at a lower rate.
All right, now let's go all the way to the bottom of our chart. We saw the big crypto winner with Bitcoin, right? But this part of the story is a perfect illustration of the super high-risk, high-stakes game that is the rest of the digital asset market. And here it is, the worst-performing asset class on our entire list. At the same time Bitcoin was flying high, the rest of the crypto world, we're talking altcoins and decentralized finance, they absolutely took a nosedive. It's a stark reminder that not all crypto is the same. These riskier bets are facing a ton of regulatory pressure, and investors seem to be moving towards the more established names.
This chart just visualizes that risk perfectly. Volatility is just a fancy word for how much an asset's price swings around. Gold? Pretty calm. Bitcoin? A much bumpier ride. But altcoins? A massive 95%. That's not just a bumpy ride, that is extreme, white-knuckle turbulence.
So, we've looked at the big winners, we've looked at the traditional players who are struggling, and we've seen the extreme losers in the crypto space. So what's the big takeaway here? What's the main theme of this whole story the market is telling us?
It really just boils down to a timeless lesson, the trade-off between risk and reward. The assets that gave us those incredible returns also came with a lot of risk. And the asset with the most extreme risk? Well, it delivered the most painful losses.
The market is very clearly rewarding specific, tangible growth stories, while punishing pure speculation. It's a huge reminder that understanding the risk you're taking on is every bit as important as chasing those potential returns.
And all of this leaves us with the one key question for anyone watching these markets. Looking forward, is the story going to be defined by real fundamental demand like we see in AI, or is pure hype going to take over again? That, right there, is the story we'll all be watching unfold.